Yeah, I mean, some of them are easy to identify. Like, yeah, insurance costs have sure gone up a lot, and maybe they'll continue to do so. Electricity costs are another one. The others, though, are much more difficult to quantify. Like, I currently snow blow my driveway. How much longer will I be able to do that? How much longer will I be able to climb up the ladder and clean the gutters? Like, these are really complex questions that you need to very much think through as you age in your home.
Our guide is titled Owning Real Estate in Retirement, and there are two ways to request it. The first is by calling 800-393-4001. The second is by going to armstrongadvisory.com. Again, the guide is titled Owning Real Estate in Retirement, and you can request it at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mark Vonner is the CEO of Veterans Development Corporation. Mark faithfully served his country from 1981 to 1984, and we're thrilled to have him as a partner and presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family that includes his father Victor and brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and it's one of the main reasons he chooses to give back to this special community. Mark is honored to continue the legacy that his father started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the Disabled American Veterans Department of Massachusetts. You can join Mark and help our great American heroes today by making a donation to support the DAV Department of Massachusetts. Please visit dav5k.boston. That's dav5k.boston.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
We got Chuck, Mike, and Ben with you today, and yesterday was a day that quite honestly, didn't really go the way I expected it to. You had a big pop in the pre-market session led by two factors. The first was Nvidia being up about 5% after reporting earnings. The second being that we got a jobs report that was better than expected as well. And so the S&P 500 yesterday opened up 1.5% and then proceeded to rally an additional 0.5% or so. And quite honestly, like I didn't know that, I thought there was a chance we'd be off to the races and maybe end up 2.5%, 3%. But but I kind of figured, okay, even if you give some of this back, it's still going to be a pretty solid day. In the end, the S&P gave all of its gains back and then gave back an additional 1.5%, and finally ended up closing down over 100 points. And so what we ended up with, Mike, was only the fourth such instance, according to Luke Kawa of Sherwood News, where the S&P opened at least 1.5% up and then closed at least 1.5% down in the last 32 years. 4 times in 32 years that has happened. You've had bigger intraday swings, but you very rarely open up so much, above the previous close and then close down in this fashion. And so anyone who said, yeah, I was expecting to see that, tell me how you did on the other 3 days out of, the last 6,000 trading days that we've had. And, maybe then we can talk.
Yeah, pretty unusual. The price action that you saw from Nvidia was more significant. It started the day up, peaked up 5%, finished the day down 3%. The NASDAQ, tech-heavy NASDAQ, started up, peaked up 2.6% before ending the day down 2.2%. What I think made this one especially unique too, Chuck, was we were doing the show live when it started to deteriorate. I don't know exactly where the S&P was when we closed, but it was negative as we closed out the show yesterday at noon. And we were sitting there saying, okay, this is interesting. There's no breaking news story. There's no, wild change in the narrative overall. It's Nvidia reported earnings. The earnings were better than were anticipated. And as the day went on, that story was just not enough to shift the skepticism that you have been seeing about this overall AI trade.
So let's dig in a little bit on this, because I think that there's an interesting thought that I've seen bandied about the deepest, darkest reaches of the internet.
Oh, good.
And I want to get your thoughts on it. So on Wednesday, in addition to NVIDIA's earnings announcement, there was another big AI announcement, which was that Alphabet, the parent company of Google, came out and said, hey, here is the latest version of our Gemini AI platform, Gemini 3. And a bunch of, really smart people around the internet who actually understand AI took a look at it, poked around, ran it through some various different benchmark testing and this and that, and pretty much unanimously said, yeah, this is a huge step up from everything else that is out there. We think this is better than what OpenAI is putting out. We think it's better than what Anthropic is putting out. We think it's the cream of the crop and the best thing that we've seen. And I don't know the exact timing on this, but at some point in, that 24-hour period, Google also disclosed that the training for the model for Gemini 3 was not done on NVIDIA processors. It was done on a different set that was developed internally by Google. And the thought that I've seen bandied about is, hey, if the latest and greatest AI model that's out there is developed by Google, not by OpenAI, and developed not using NVIDIA chips, then given the fact that for the last 3 years, the center of focus for that AI trade has been, hey, whatever OpenAI is doing is where you want to be, and NVIDIA is the only way to power those kinds of models that generate those results. Could Google basically be putting a stake into the heart of those two pillars of the AI trade? And maybe some of that was what we saw investors realize over the course of the day yesterday. Maybe. I'll put it out there. I'm curious to get your thoughts, Mike.
Yeah, I don't feel as though it made a huge splash across all circles, but it is a big enough announcement that if you're following this trade closely, you might trade on that. It's reminiscent of the DeepSeek news from, what was that, March of this year?
February.
Okay, so February of this year, Chinese AI tool comes out claiming that it didn't really use NVIDIA chips for training, gets tested by people. It's shown to be a pretty impressive large language model, sent some questions into the overall narrative. Ultimately, I think in part because the news was out of China and in part because there were legitimate questions about how they trained the thing, that story kind of died off in terms of where it went. But yeah, certainly, I think if Google, if it holds true that this new AI model is truly competitive, more than competitive than with ChatGPT and wasn't trained on NVIDIA chips, that is a newsworthy story and does question NVIDIA. I guess my point would be, it's not as though we got some splashy headline about that at 11 a.m. that you and I can track down and say, oh yeah, this was the shift. This is when it turned.
Which is why I think a lot of times what happens is markets move and then people try to ascribe meaning to the move after the fact.
Right.
Like, was it just like every trading desk read this piece, like the Morgan Stanley one read it at 11 a.m. and then Goldman read it at 11:05 and then, Bank of America read it at 11:10 and it just kind of continued down. I don't know. I do think those things do develop over time. And what we are seeing, in my opinion, is the realization of the idea, and this is over the last month or two, that, hey, there's more than one way to build an AI model, and where AI can go can be dramatically different from where it's been the first few years. Just look at how people are talking about this in the last couple days now. It's like, oh, OpenAI's lost, some of its leadership. That's a thought that we haven't seen out in the public context in the past 3 years, Mike.
True. The other piece of this NVIDIA earnings and just the market reaction that I want to bring up, you make a fair point. I did not anticipate markets turning over midway through the day and going negative. I don't think that anyone genuinely did. But we did talk about going into this week how NVIDIA's earnings did not really have the ability to genuinely shift the narrative.
No, they couldn't.
They couldn't because they were the last to report. So if you were going to see a negative story about NVIDIA's earnings, it would have shown up in earnings from Meta, Microsoft, Alphabet, Amazon. You would have expected it there. And given the trajectory of spending that all those companies reported, NVIDIA's earnings had to be pretty decent. They didn't need to beat their earnings estimates in the way that they did, but even with that beat, that's not what the shift in the AI narrative has been about. The shift in the AI narrative has been these companies are clearly going to continue to build out AI, but will it ever pay for itself? And NVIDIA can't answer that question.
Right, and specifically, if you're asking, are we in an AI bubble, then what you're actually saying is, if the answer to that question is yes, which I'm not saying it is or isn't, but if you're answering yes, we're in an AI bubble, then what you're telling me is people are buying too many NVIDIA chips today. You're not telling me people aren't buying enough of them.
Right.
You're telling me people are buying too many. The bubble pops when they realize that they are buying too many, but we don't know if that's what's going to end up happening. It may not, and it still is very uncertain at this point. What I can tell you is that the market is starting to get worried about these companies that may be buying too many. Specifically, I got to point at Oracle, who is down another 5% today.
Yeah.
Oracle, remember, is the company that back in September, or was it late August? Hang on, let me pull the date. Yep, September. They reported earnings and magically said, hey, we've got another $300 billion in commitments for cloud spending that's going to show up in the next, several years. And everyone was like, oh my goodness, this is amazing. And Oracle stock popped like 30+% in a single day. And the stock before that was trading at about it was like $235 a share the day of earnings. It went up to $345. It sits here today at $199.
Yep.
It is almost 15% below where it was the day before that announcement. And this is the representation, in my opinion, of people saying, hey, we're worried that you're spending too much money, because Oracle in particular is doing a ton of debt financing to do this. They don't have the cash flow. They don't have the money that Meta and Google and Microsoft have to just pour, into these projects. And so Oracle's financing it with a ton of debt, and the market is looking at it, not just the equity, but you take a look at what's going on with credit default swaps for Oracle and how their debt's being priced. And the market's looking at them saying, we're not sure that you're going to be able to generate enough revenue to cover all of this.
Chuck, this is for good reason, the only story that anyone wants to write about today. When you see a massive shift in markets like you did yesterday, it is noteworthy. Where do we go with this next in terms of coverage? Because there is a lot to unpeel here, and I know we need to take a break.
Yeah, why don't we... Let's see. Let's dig into a little bit about the financing of this data center construction, because that, I think, is where the agita is at the moment. So let's do a quick break and then get your pencils out, unless you're driving. And we're going to give you some stuff to scribble down about how debt finance markets work when it comes to building multi-billion-dollar data centers.
This is your home for the most comprehensive coverage of the economy and the trends on Wall Street. This is the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step-up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Cardiovascular disease is the #1 killer of women,
taking the lives of 1 in 3.
That's more than all forms of cancer combined.
For too long, heart disease and stroke have taken the lives of the women we love.
But we're not giving up because we have something better,
stronger, more powerful.
We have each other.
When we come together and go red,
the more power we have against our greatest health threat.
Visit GoRedForWomen.org today to learn more.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Miss any of the show? Catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you by the U.S. Virgin Islands Department of Tourism. Your next incredible vacation is a click away, and if you act fast, you could be on St. Croix to experience their Crucian Christmas Festival taking place this December through early January. Discover the magic of this long-standing tradition with incredible food, music, and entertainment. Or just go to soak up the sun, stroll along white sand beaches, and feel the rhythm of the heartbeat of the islands. The USVI is America's Caribbean paradise. Plan your escape now at visitusvi.com. That's visitusvi.com.
Mike, let's talk a little bit about what we are seeing in debt markets as it relates to artificial intelligence. Can you give some numbers surrounding, kind of what we've seen this year and this quarter particularly?
Yeah, so these companies that have been spending at least started by doing so out of cash flow, and they had the cash flow to be able to do it. But more recently, companies like Amazon, Alphabet, Microsoft, Meta, Oracle, they've raised $108 billion in debt combined in 2025. Just for some context, that's more than 3 times the average over the previous 9 years in order to finance some of this. Now, on its surface, I don't really have a problem with Amazon borrowing that type of money. But it does, ultimately raise the question of, when you talk about other companies such as Oracle, if these projects don't pan out the way they are supposed to, what precisely does that look like? And then the other piece on this, Chuck, that we haven't spent a lot of time on are the off-balance sheet projects that these companies are also financing without really taking out a boatload of debt on their balance sheet. For instance, the Hyperion project down in Louisiana, which utilizes a special purpose vehicle financing structure. What does that mean? It means that the project is not actually owned by Meta. They financed all of it, but it is its own corporation that is effectively controlled by Meta. But the financing, all the debt that's been taken out, is not on Meta's balance sheet because it's a special purpose vehicle. And, this is where some of the concerns about private credit come in. And so, yes, there's been a bunch of debt raised by a bunch of companies like these big five. There's been a lot more debt raised by others. But then there's also a whole bunch of kind of shadow debt, as far as I'm concerned, that's funding some of these projects.
And let's use Meta just as an example, because I think this represents, kind of the... Again, remember, Meta reported earnings and sold off pretty hard on them. And it's because what's going on with Meta's financials are different from what you're seeing with Microsoft and Amazon as an example. So Microsoft still has increasing year-over-year trailing 12-month free cash flow and earnings right now. There's nothing in Microsoft's financials that you look at and you're like, ew. Meta, on the other hand, there's still nothing that you're like, ew, like this is awful. But when we look at their free cash flow picture, just as an example, at the end of last year, trailing 12-month free cash flow was $54 billion, which is a lot of money. Today, it's $44 billion. It's a 20% decline in a span of 9 months. And remember, Meta's committing to continue increasing CapEx next year at an even higher rate. So you look at this and you're like, okay, so Meta's free cash flow has declined by 20% this year, and they're going to continue ramping up CapEx. Even if the debt doesn't hit their balance sheet, you're still going to see that spending coming out on, cash flow statements. And then when you get to the income statement, the depreciation eventually is going to hit as well. And this is before you even look at the fact that, hey, their trailing 12-month net income went from $71 billion in Q2 down to $58 billion in Q3. Now, some of that, a decent chunk of it, was because of a one-time hit related to how they're realizing some tax things related to the new tax bill. But still, you're basically seeing it flattening out in terms of net income if you exclude that charge. And that means that, again, once that depreciation starts kicking in, it's going to start showing up there. And these are the concerns, is that, hey, if you're really committing to spend the amount of money that you say you are committing to spend, at some point you have to start generating a return on that, because otherwise it's going to negatively impact these metrics as you go forward.
Yeah, that's been the focus over the last couple of weeks, especially, has been the questions about how long these chips last, the debts taken out over 30-year time periods. But if you need to replace these things every couple of years, which has been theorized, how does that really match up? And then, again, probably just because I've been obsessed with the private credit side of all of this too, I keep seeing these stories of, oh yeah, and now Blue Owl is lending to this vehicle that's going to build out this AI data center, and oh, don't worry, because it's got a, one of the tenants in there is Alphabet, or one of the tenants is Meta. And you look at it all and you say, okay, yeah, the tenant is Meta, but they don't actually own it or have any real liability if that thing doesn't pan out the way you want it to. I don't know. All of it just seems very connected and interconnected, and beyond even just the public but debt issuance that's happening.
The other piece, this is all happening during a normal economy. What happens to these businesses if there is a recession? Which, by the way, there will be one at some point. We're not just going to never have another recession ever again. I don't know when it may or may not be, but what happens to these businesses and their plans and their revenue if there's a recession at some point? Quick break. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams, your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Mark Vonner is the CEO of Veterans Development Corporation. Mark is a career military man, having served for nearly 20 years, and we are so thrilled to have him and his company as a key partner and the presenting sponsor of the DAV 5K Boston. Mark comes from a proud military family, including his father Victor and his brother Timmy. Mark talks often about how serving his country was one of the greatest achievements of his life, and that's one of the key reasons that he chooses to give back to this special community. Mark is honored to continue his legacy that his father started started when he built Veterans Development Corporation. Working to help many disabled veterans and their families has become a lifelong goal for Mark, and it's why he's taken the time to fully support the DAV Department of Massachusetts. You can join Mark Vonner and Veterans Development Corporation and help our great American heroes today by making a donation or becoming a sponsor. Simply visit dav5k.boston. That's dav5k.boston.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, a lot of people think estate planning is complicated or something they can put off. Can you explain how a joint revocable trust can actually make things simpler for couples who just want to protect what they've built and keep things easy for their family?
Sure. Joint trusts are really so underutilized, but they're really the most important and easiest way to do planning. Many people think of two trusts, right? Splitting everything between a husband trust and a wife trust. Well, this already makes it simpler. If you have just one trust, you can both put your assets in the trust, whether you contribute the joint bank account or the joint brokerage account or the joint real estate and rental properties. It's easy. Just put it all into one trust and you're both trustees. So funding is simpler, operation is simpler, and most importantly, you can actually get a better result for moderate estates from an estate planning standpoint. Because on the first death, you get to cram down all the assets that are in the joint trust to get a step up in basis, whereas if you've separated the assets between the two trusts, you're only going to be able to cram down half as much. And if you do the planning right, you can actually use these trusts to get a double step up in basis when the surviving spouse dies.
Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan. It's called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699. Or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch. A complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
Well, after yesterday's wild ride, markets look like they might be taking us on another wild ride today. It is mixed out there. The Dow Jones is up over 0.5%. The S&P 500 is just barely clawing to 0.1% up right now. The NASDAQ has flipped. It's now in the negative territory, down almost 0.4%, and the VIX has flipped positive. It's up 1.63%. Eli Lilly earlier this morning reached $1 trillion market capitalization, the first healthcare company in the world to join the exclusive club dominated by tech firms. The company's stock has climbed more than 36% this year. The Indianapolis, Indiana-based drug maker stock has been riding the skyrocketing popularity of its weight loss injection Zepbound and diabetes treatment Mounjaro. Eli Lilly is currently up over 0.5%. Apparel retailer Gap up over 5% after topping expectations for same-store sales with 5% growth in the latest quarter thanks to its viral Better in Denim campaign with Cat's Eye. Excluding the pandemic, same-store sales growth was the fastest since its fiscal 2017 holiday quarter. Cloud solutions provider Veeva Systems is off by over 11% after saying it expects fewer top biopharmaceutical companies to select its Vault CRM. Veeva posted third-quarter earnings of $2.04 per share, excluding one-time items, on $811.2 million in revenue, versus analysts' estimate of $1.95 per share on $792.8 million in revenue. Ross Stores reported better than expected revenue of $5.6 billion compared to consensus estimate of $5.42 billion, pushing its shares up over 6%. Ross also raised its fourth quarter earnings guidance, saying, "We now expect tariff-related costs to be negligible." I am Ben Kitchen, and that was Wall Street Watch.
I gotta say, Mike, that Wall Street Watch was actually one of the first times that I've ever felt like really old.
What made you feel really old?
Not only did I have no idea who Cat's Eye is.
Sure.
But when I read like an actual piece with that, I didn't even know that's how it was pronounced. I thought it was because it's spelled Katseye with no spaces or apostrophes. I thought it was like Katseye.
Yep. I can see how you get there.
So
to be honest, it might be I just guessed.
No, I'm reading the Wikipedia page right now, but this is one I'm normally at least halfway like knowledgeable about things that people in their 20s are talking about. This one I had no idea. So
I felt pretty old once K-pop Demon Hunters started making its way through.
No, that I get, I understand. I like it's front and center in my mind. I'm there. This I've just never heard of even like Cat's Eye. I was I thought Cat's Eye might have been a person at first. You know, kind of like Kesha or.
I thought it was like a good luck charm, like a rabbit's foot.
Right, or like is it another brand? You know, like I don't know. And now I find out that it is a group of 6 women that sing. So I guess
we all learn something.
I know this is a great day that I learned something new. So it's wonderful.
Thank you, Ben. Thank you.
I appreciate that. Mike, anything else on AI that we want to discuss now that the S&P is down another 0.25%?
Look, I think yesterday's market move was an interesting point in this shift and confirmed some of my worst concerns about all this, which would be that, even really robust earnings aren't going to be enough to turn the tide on it. A few interesting points that I don't think are hugely important to this current moment when it comes to AI. One piece from the Financial Times about, the entire AI piece right now is about large language models. And that's really what's mattered. That's what's driven prices higher. What if that's actually not what AI ends, what if the large language models aren't ending up to be the winners in all of this? What if it's something else? What if it's drug creation from AI or using AI to, properly set up robotics or something entirely new? And then the other piece that Mohammed El-Arian wrote about the bubble right now is I think was worth reading because it reiterates a few of my points about all this. Is there will absolutely, at least in my opinion, there will absolutely be some massive winners because of this innovation around artificial intelligence.
Yes.
The problem is that everyone's being treated as a winner right now. And that, or at least as of a few weeks ago, they were all being treated as winner. Now that Oracle's stock has come way back down, maybe they're not. But a few weeks ago, they were all being treated as winners. And what we know from every market cycle previously is that not every company ends up being a winner when it comes to any new innovative technology.
Yeah, I think that we've talked about this a little bit before, but look, everyone being priced as a winner is a problem because not everyone wins when new technology is created. But think about think about some of the other technology bubbles that we've seen. You can have a bubble that exists, have a bubble that pops and creates a bunch of losers, but still changes the world for the better through increased productivity. This happened with railroads. This happened with radio. It happened with the automobile. It happened with airplanes. It happened with the internet. And in each of those cases, yes, there was way too much money poured in to those businesses chasing returns in the short term, and you had huge bankruptcies that came out of them. But Michael, last time I checked, we are broadcasting on radio, correct?
We are, yeah.
And
using the internet.
And did you drive to work today?
Yeah.
And these innovations can change the world and still create all kinds of malinvestment while the initial excitement is going on. And I think that it's important to realize that that can happen. And the piece to be careful of is, hey, the people that even today, I still meet with people today who are 60, 70 years old and, they cut their teeth working in the tech bubble. And they'll tell you, yeah, I had all of my money in company stock because it seemed like the party would never end, and then it ended.
Yep.
And that's the kind
of $5 million one night, and then overnight I was worth
$2.
1/20th of that.
Yeah, it's like those are the things that you have to, be cognizant of in terms of not getting too greedy and understanding the mechanics of these things. But I do think that you can look at this and say, we're going to all be using more artificial intelligence 5 years from now than we are today. We don't know exactly what format that's going to be in at that point. There still is probably going to be a huge shakeout because the numbers that are being spent are just astronomical. And we still may come away better off when we look back 20 years from now, despite this maybe being bubblicious.
And this type of bubble that we get here in the United States, which again, may not be unique to this moment in time, does lead to one good thing, which is historically it's left behind a whole bunch of really usable infrastructure. And you just don't necessarily get that in economies that don't have, I guess, the type of free markets and free-ish capitalism that we have in the United States. You can't exactly call it full free market capitalism here, but compare it for a moment to the central planning of the Chinese government, and there's a reason they are several years behind us on this AI trade.
Maybe.
We think.
We don't know.
Yeah.
Let's take a quick break here, and when we return, let's talk a little bit about what we are seeing from Amazon in terms of their layoffs. Warn notices are starting to come out in different states where employees are impacted. Who are they laying off, and where are those layoffs happening? We'll tell you after this.
Miss any of the show? The Financial Exchange Show podcast is available on Apple, Spotify, and iHeartRadio. Hit the subscribe button and leave us a 5-star review. This is the Financial Exchange Radio Network.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans, Department of Massachusetts, and the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
Your home has been the center of your life for years, maybe decades, but as you enter retirement, its role starts to change. Hi, this is Mike Armstrong from the Armstrong Advisory Group. The focus shifts from what your home means to how well it supports your lifestyle. For many people, the space that once made sense for a busy family now requires more time, energy, and money than it should. Retirement is about simplifying, choosing a home that's easier to maintain, closer to the people and services that matter, and better aligned with how you want to live may be the right move as you head into your later years. Our new guide called Owning Real Estate and Retirement tackles a number of different issues that may help you turn your home into a source of flexibility and freedom, helping you plan for the years ahead with comfort and confidence. Get your free copy today by calling 800-393-4001. That's 800-393-4001, or you can request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Like us on YouTube and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is powered by Circle K Convenience Stores. Circle K is now the official convenience store of the DAV Department of Massachusetts. On behalf of Circle K, thank you, veterans, for all you've done.
Mike Peace and CNBC talking about where the Amazon layoffs are starting to show up. What are we seeing there?
So a few states in which they have filed the mandatory layoff announcements, it's indicating that in places like Washington, New York, New Jersey, and California, 40% of the jobs in those states were engineering job cuts. I don't know that I find this immensely surprising, but effectively Amazon announced 14,000 layoffs that will be coming. In those states, they've actually filed the specifics, and that's what you're finding. But to me, when I read through this a little bit more, it was kind of logical. They are laying off in some of the higher expensive areas of their business, such as a product that I wasn't even aware of, Lens, that allows people to kind of, I think, somehow, shop with some sort of vision of what it looks like in your room, as well as some gaming sides of the business that were pretty highly intensive and high capital. And so a lot of those are engineering jobs in that space. And look, every company has been out there looking to find ways that they can cut some of the higher expenses in order to focus on the only thing that investors have cared about, which is artificial intelligence and how to put more resources into it. Did it read any differently to you?
No, not really.
Yeah. I mean, 14,000 job cuts. I don't mean to minimize it, but it clearly hasn't been enough to move the needle on the overall employment situation. Yes, I understand why people are concerned about the labor market, given the just quantity of all of these announced job cuts across major companies. But as we saw yesterday with the jobs report, it has not been enough to move the needle, at least through September. And even with the most recent data we're getting on weekly jobless claims, in the aggregate, these concerns about firings are not really moving the needle at all.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and live island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Mike, we got a piece in the New York Times. Is a global housing bubble about to burst?
What a piece of clickbait.
Which first begs the question, not raises it, but begs it. Is there a global housing bubble?
Well, so they write this article. Somebody wrote the title of the article to get you to click on it. They then go on to say, no, we're not in a housing bubble. It's not about to burst.
So
it seems misleading at best, and
let's just move on.
Intentionally deceptive at worst.
Let's just move on because
they literally did this. They asked, "Is a global housing bubble about to burst?" to try and get you to click on this piece or pick up that newspaper, and then in about 1,000 words tell you no. But there's a few cities that might be a little bit overvalued.
Right. Like I will look at this part because it's kind of interesting. They basically analyze. UBS analyzes the Global Real Estate Bubble Index, which, gosh, wish I could sit on like that committee, and talk about that more. So they looked at 21 major international cities. So again, this is not looking at where most people even live. It's basically just like the really expensive, crowded, biggest cities out there. And it says, hey, here are the ones that are low risk. Hong Kong, San Francisco, London, New York, Paris, Milan, and Sao Paulo. Okay, like those are some pretty big cities. If they're not going through something, then it doesn't seem that anything can happen. Moderate risk. Toronto, Sydney, Australia, Madrid. Why do they have to say Sydney, Australia? They don't give us a country for any of the other ones in here. What other Sydney is there?
Yeah, likewise, they do give a country for Sao Paulo, and I am not familiar with any other Sao Paulos.
Oh, you don't know about Sao Paulo, Georgia?
Yeah.
No.
Doesn't seem like the one they were talking about.
Madrid,
okay,
Frankfurt, Vancouver, Munich, Singapore. Okay, fine. Elevated risk. LA, Dubai, Amsterdam, and Geneva. And high risk Miami, Tokyo, and Zurich. What does one do with this? Not buy the property I was going to never buy in Zurich anyways?
I'm not sure, and I also don't know how you write this. I understand why you exclude mainland Chinese cities. You're not going to get a whole lot of pricing data on what's going on in those Chinese cities. But how are you writing this article and not factoring in cities like Mumbai, Mexico City, other hugely populous cities that aren't seemingly on this list for some reason?
I'll give you a hint. It's because they're not wealthy.
Neither is Sao Paulo. I mean, Sao Paulo is actually fairly wealthy, so maybe that's
it's just like you look at what is present. I'm just looking at like how they are trying to measure this.
Yeah.
And number one, they're looking at cities where real estate prices are up by more than 25% in the last 5 years. I'm guessing that excludes most of China to begin with, because China real estate has been garbage for a while now.
Okay.
Other ones, they are looking at cities that are big for investment. I'm guessing that Mexico City and Mumbai probably don't have a whole lot of investors pouring money into real estate there.
Mm.
I don't know, but like just a guess. Beyond that, it really feels kind of arbitrary. Like they just looked at it and they're like, well, these cities aren't rich enough, so we're not going to put them in.
But like New York Times, if you're going to just choose a cherry-picking article about specific cities and you write the title, Are We in a Real Estate Bubble and Is About to Crash? You could have done a better job cherry-picking.
It's true. Like, you could have made it sound worse.
Right? Like, just choose a bunch of cities in Louisiana, California, Texas, and Florida, and you can paint an easy picture of why this real estate market is a bubble and it's about to crash. Instead, they just... this is a bad piece.
Yeah, it's not great. I don't
But
really...
thank you for calling it to our attention, Ben, because we like finding pieces that are next to useless and talking about them.
Well, again, the good news is this obviously is going to make it into our Festivus stack.
Yeah, that's true.
It's a pretty good candidate when the whole assumption of the title is swiftly put down pretty quickly into the piece that it doesn't even exist to begin with. So that's kind of nice. Let's see. Do we want to cover anything else on real estate? No. Anything on refinancing? It happens sometimes.
Well, one interesting note, it's seemingly happening faster than in previous cycles. Maybe that's just because we got really super used to 4% interest rates, but seemingly people are refinancing out of their existing mortgages faster than they would have in previous cycles.
Okay, so there's that.
There you go.
Let's take a quick break. We still got a second hour coming up in a little bit, so make sure you stick around as we wrap up the week.
Here at the Massachusetts Department of Elementary and Secondary Education, we are committed to all students not only attending, but succeeding at school. Your presence is powerful. Share why you attend at doe.mass.edu.
Sponsored by the Massachusetts Department of Elementary and Secondary Education.
Sometimes we know what's next. Other times, it's impossible to know. Life can change in an instant. Don't be caught standing by the next time someone's heart stops. Knowing CPR gives you the ability to act and takes you from bystander to lifesaver. CPR is a life-saving skill. Join the nation of lifesavers today by learning CPR at heart.org/nation. National support for CPR education provided by Elevance Health Foundation.
Are you over the age of 50? Want peace of mind and financial security for your family? Here's an important message to you from Senior Care USA. The average funeral now costs over $10,000. That leaves your loved ones the burden of paying your debts and funeral costs. Our plans start as low as $1 per day and will pay your family up to $30,000 to help pay for your funeral and other expenses. There are no medical exams. Your rates will never increase, and your plan cannot be canceled, regardless of your medical conditions, as long as you make your premium payments. Get up to $30,000 in final expense insurance. Call now for free information. Just answer a few simple questions and get approved right over the phone in just a few minutes. Call right now.
Call 800-378-3818. 800-378-3818. 800-378-3818. That's 800-378-3818.
Did you outgrow your timeshare and now you want out? But you can't. You can't sell it, and you can't get out of the contract. Imagine trying to get out of your mortgage. That's what a timeshare is. You can't just call up the bank and say, I don't want to pay it anymore. But we may be able to help you do just that. Listen, a timeshare maybe for you once was a great thing, but now you don't use it much, and they are not easy to get rid of. Plus, you do have to pay for it every month. Qualified timeshare owners can get out of their contract legally and permanently without ruining your credit or even filing bankruptcy. And imagine no more mortgage payment or fees. Call the Timeshare Exit Hotline qualification line now. It's free to learn more.
800-455-7967. 800-455-7967. 800-455-7967. That's 800-455-7967. Paid for by Timeshare Defense.
This is the Money Matters Radio Network, WBNW 1120 AM and W275 CM FM. Concord, Boston, the Money Matters Radio Network. Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
This is Michael Valila, Adjutant of the Disabled American Veterans Department of Massachusetts. The DAV of Massachusetts has helped me and countless others adjust to civilian life through a variety of incredible programs. Through our local Veterans Assistance Program, we provide necessary services to veterans and their communities, such as food shopping, landscaping, and companionship, but we need your support. You can help by making a donation today. Please visit dav5k.boston. That's dav5k.boston.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Bonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all three. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and our guide this month is titled Owning Real Estate in Retirement. Mike, for someone who wants to own multiple properties in retirement, maybe a warm weather and a summer property, what do you end up doing as far as, trying to negotiate and navigate that decision?
Well, it's a lot of questions to answer. How much time are we going to spend in one place versus another? Where am I going to be a resident? If I am, leaving between two different homes, where do I feel comfortable being a resident? I get this question all the time. How much will I get in tax savings, for instance, by moving to a no-income tax state? And what ends up happening, though, sometimes is they make that decision based on income tax and don't realize where a lot of the cost savings comes, which is estate taxes. And so if I'm going to own multiple properties, where do I intend on actually making my residency? And will I be able to commit to that for the long term is an important one.
Another piece there, look, at a certain point in everyone's life, that travel and moving between two places and even maintaining two places becomes challenging. When do you typically see those kinds of conversations being navigated?
For most folks, I see it in the 70s and early 80s. That's when this stuff starts to change for a lot of people, but ultimately it's customized to each individual, and you might be able to afford one scenario if you're willing to rent out your property for a period of time.
Sure.
It really comes down to customizing for your situation.
Our guide this month is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001 or going to armstrongadvisory.com. That guide again is titled Owning Real Estate in Retirement, and you can request it by calling 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong Advisory and the advertisers heard on this program do not endorse each other or their services. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. Help us support our great American heroes by visiting dav5k.boston and making a donation today. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Chuck, Mike, Ben with you, and as we try to finish up the week, we've got a very volatile day with index prices moving 0.5% in a span of minutes multiple times over the course of the day. As of this very instant that I'm speaking, the Dow Jones Industrial Average is up 127 points, the S&P 500 is down 7, and the NASDAQ is down about 150 points. So overall mixed markets, but the NASDAQ really continuing to feel pain, being led down by Oracle, CoreWeave, Palantir, AMD, and Nvidia and Broadcom, all of which are down more than 3% today. Google trying its best to try to keep the puppy afloat, up about 3.3%, and Apple up 1.4%. Those are basically the things that are keeping the wheels from falling off as we sit here right now. When we take a look at other markets that we are watching, the 10-year Treasury is down 4.5 basis points to 4.059%. So interest rates moving down a touch. We'll talk about why in just a moment. Dollar index, despite interest rates moving down, dollar index up 0.14% to 100.235. And we've got gold up $9.30 an ounce to $4,069.30. Crude oil down $1.28 on West Texas Intermediate to $57.72. So crude oil prices continuing to slide. AAA national average for gas prices, though, still up on the week from $3.08 to $3.09.4. And so still no major movement when it comes to gas prices. A year ago, we were at $3.06, so there's been a 3-cent swing in a full year. Mike, we got a couple things to talk about as it relates to the December Fed meeting. Basically, going into today, if you look at the CME FedWatch tool, it was a 39% chance of a cut and a 60.9% chance of no cut at the December meeting. This morning, though, John Williams, who do we have his music, or is that just a Tucker thing? That's just a Tucker thing. It's fine. New York Fed President John Williams came out this morning and said, in no uncertain terms, yeah, I'm probably a go for a cut at the December meeting. And so just when you actually look at who, is voting in December, markets have now swung to a 75% chance of a rate cut at that December meeting. This had the impact of, and I watched this right as it happened, S&P 500 futures moved up about 0.2% in 5 minutes after Williams said this. And I can't help, Mike, and I don't like to make the tech bubble comparison too much because, I don't really know if, this thing is that. I suspect it might be in certain instances, but I don't know that it is. And also, when you say tech bubble, everyone just gets, really nervous because the tech bubble sucked. But I can't help but be drawn to this piece from the New York Times from January 3rd, 2001. Stock surge on Fed rate cut. NASDAQ adds more than 14%. And granted, this was
what happened after January of 01? I can't seem to recall.
Well, it's funny that you should mention that because I pulled this up today just because I was like, let me see exactly what happened, the rest of the year for 2001. And in fact, it was really, really bad in the NASDAQ for the rest of the year. So the NASDAQ, as I indicated there, it did spike 14%, on that day. It actually went on to make a new all-time high, even about 5% above that a month later. And by the end of the year, really by the end of September, remember 2001, you did have September 11th that obviously impacted things as well. But the NASDAQ then traded down about 65% from the end of January through mid-September.
Yeah, Chuck, difference this time. Investors don't care about this, perceived move in rates.
Well, they
did briefly, but
yes.
Again, the dominant narrative has taken back over here.
I think we're smarter than then.
I doubt it.
No, like what I mean by that is we have that history in place where like people like me can be like, hey, look what happened then. Whereas I don't think that you had like quite the same history in 2000 just because it was the first time through something like that in a lot of cases.
Yeah. This is not the thing that people care most about, I don't think, in terms of the rate cuts. But I will say that if we continue to get a sell-off into December in equity markets, then that's going to be a pretty good incentive for the Fed to go and cut rates. I know that they do not directly care about that, but they do care about financial conditions, equity markets being one of those conditions. And so, we're barely off 5% of all-time highs on equity markets right now. But, imagine for a moment that you get a continued deterioration in equity markets and you have some Fed voters that are on the cusp about what to do. I would think a market sell-off is enough to push them towards another quarter point rate cut. So I see where CME futures are going with this, but I land back on, if your concern is that companies participating in the AI universe right now are grossly overvalued, borrowing too much, and going to face issues with revenue realization over the course of the next few years, hell, forget about a 25 basis point rate cut. 100 basis point rate cut doesn't fix that problem. So, I'm not sure that this is what's going to matter to equity markets at the moment.
Yeah, I mean, again, the cut that happened in January of 2001, it was a surprise intermeeting 50 basis point rate cut. Mm. And it didn't end up mattering because the tech bubble was already popping.
Yep.
So that this is why I can hold two views in my head simultaneously. One of which is, hey, if the Fed was cutting in September and October, I don't think we've gotten anything to this point that says that they shouldn't be cutting in December.
Fair.
But I also don't think it matters what they do in December. Because the economy either A, is going to be strong enough to pull itself out of, this little concern that we're in right now, or B, it's not even close to the amount of firepower that you need to deal with the amount of spending that's going to be canceled and what's going to happen to AI-related stocks in the event that this is a bubble that's popping.
And, so long as we're talking about firepower, Chuck, the type of firepower you would need to bring to bear to, if we end up in that market condition, given where deficit spending already is right now, is going to be a tremendous amount of money. We're running pace for 7% deficits this year after the same for the last several years. I recognize that in the event of a full-on recession, Congress will not blink at printing trillions of dollars.
Where do you print it though? I don't mean where do you physically print it, but here's an interesting question. Let's say there is a recession.
Mm.
What exactly do you do based on where the problem is coming from? I don't know.
Yeah, I mean, look, we have a tough time playing this one out, right? Does this lead to mass layoffs? These companies that are impacted by this are not exactly the largest employers in this economy. So if you got a stock market sell-off and recession that didn't result in markedly higher higher unemployment, then you might not do much at all. If it leads to problems in debt markets and problems with businesses being able to find financing that have nothing to do with tech and artificial intelligence, then yeah, you might see the Fed come in to backstop some loans. You might see Congress come in to provide some relief to the housing market to see if that can kickstart the economy. I think it depends on what sort of recession you're talking about.
Let's take a quick break. When we come back, I want to spitball on this. I don't know. Do you mind entertaining me on this for a little bit,
Please.
Mike? Let's take a quick break, and then let's continue this discussion when we return.
Hear the Financial Exchange every day from 11 to noon on SiriusXM's Business Radio Channel 132. Keep it here for the latest business and financial news and the trends on Wall Street. The Financial Exchange is now live on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
We're proud to announce that Circle K is now the official convenience store of the DAV Department of Massachusetts. At Circle K, supporting those who bravely served our country isn't just a commitment, it's a heartfelt mission. Circle K is honored to stand with the DAV Department of Massachusetts to ensure that veterans receive the care and recognition they deserve. If you'd like to do your part, please visit davma.org. Thank you for standing with Circle K and the DAV Department of Massachusetts, and thank you, veterans, for all you've done.
Estate planning doesn't have to be complicated. Cushing & Dolan's new guide, The Simplicity of Joint Revocable Trusts, shows couples how to stay in control, avoid probate, and help protect what they've built for their family. Call 866-848-5699 right now and ask for your free copy today. That's 866-848-5699. Or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001 or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step-up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Hey, listen, are you a 50-year-old person looking for term life insurance? Then you need to talk to Bob. Bob specializes in helping people find $1 million or more of term life insurance for a couple of $100 a month. Look, you need to know there's a price war in the term life insurance business, and you may be paying too much. Call Bob, and he'll shop and see how much money he can save you. Look, this could be the last term life insurance policy you ever have. Your rates are guaranteed for the next 20 years. That's right, guaranteed level rates for the next 20 years. And if you're a smoker or your health is not perfect, Bob has great rates for you too. So for $1 million of term life insurance coverage for a couple of $100 a month, call Bob right now. 800-965-7987. 800-965-7987. 800-965-7987. That's 800-965-7987. Paid for by Term Direct.
The Financial Exchange streams live on YouTube. Subscribe to our page and stay up to date on breaking business news all morning long. This is the Financial Exchange Radio Network.
The Financial Exchange streams live every day on YouTube. Subscribe to our page and follow market activity all morning long, only here on the Financial Exchange Radio Network. Time for trivia here on the Financial Exchange. On this day in 164 BC, Judas Maccabeus recaptures Jerusalem and rededicates the Second Temple during the Maccabean Revolt, commemorated since as the Jewish festival of Hanukkah. So your question today is quite simple. What day does Hanukkah begin this year? What day does Hanukkah begin this year? Be the third person to text us now at 617-362-1385 with the correct answer, and you'll win a Financial Exchange Show t-shirt. The third correct response will be our winner. See the complete contest rules at financialexchangeshow.com.
Mike, let's talk a little bit about responses in the event of a recession. I don't know if we're going to go in one, and I have no clue exactly what it would look like. But it came up, in the last segment, hey, what would the response be? Because if you look at the last couple of times that there has been a recession, two very different responses. The first one, if we go back to the financial crisis, it was, okay, we're going to basically, it was three-pronged in my opinion. We're going to backstop the banks and bail them out. We're going to bail out automakers, and then we're going to pass an infrastructure bill that hopefully stimulates the economy. And ultimately, people were unhappy about all three of those things. The fact that banks were bailed out while individuals were not, you could argue is kind of a microcosm as to how we've gotten to where we are in 2025. Socialism for the big guy, free market for the little guy, that's kind of how it feels. Same thing on the auto bailouts. I think people feel similarly, in that respect. And the infrastructure bill that was passed, the American Reinvestment and Recovery Act, generated one of the most lackluster recoveries out of a recession that we've ever seen. So,
but by the way, Chuck, reactions to that, you point out the bailout for the big guy, nothing for the little guy. I think it's also why the reaction to the COVID crisis, while still focused on companies by and large through things like the Paycheck Protection Program, it was more of the everybody gets money during this recession. And I think that's a direct result of the criticisms of 2008 when they just went after employers.
Right. So then we had, the COVID stuff, which, okay, here's, stimulus check for this and paycheck protection for that and yada, yada.
Pay your student loans for 4 years. Yeah, all sorts of fun stuff.
Whole thing. And I think we look back at both of those situations and we're like, yeah, neither of them were really exactly, how we should have done things. We tried not to make the same mistakes we did coming out of 2008, and instead we made entirely new ones coming out of 2020.
So let's go back to the one that keeps getting compared to then, right? It's the dot-com bubble. What happened there? In April of 2000, unemployment was 3.8%. The recession, according to the NBR, kicked off in March of 2001. By 2003, the recession was officially over by November of 2001, but by June of 2003, you had unemployment at 6.3%. I mean, to me, the reaction from the government, what led us out of that recession, is not quite as clear as it was with, passage of the Troubled Asset Relief Program and bank bailouts. Maybe it's because I was younger when it happened, but there were some tax cuts. There were some wars. There was also a pretty rapid.
I've never heard it referred to quite that way. There were some tax cuts. There were some wars.
There were some wars. I really point to though. By the mid 2000s, you had some major tech companies that had gotten beat up during the dot-com bubble actually showing some pretty profitable businesses, and therefore. You did not have this, maybe you didn't have this need or impulse for additional fiscal support.
Yeah, so I think when you talk about it, you had the Bush tax cuts that went into place in the middle of 2001. And that was obviously, a pretty substantial fiscal response. What it ended up doing, in 2000, there was a federal government surplus of $236 billion. By 2003, the deficit was up to $378 billion for that calendar year. There also was a 2002 stimulus bill that was passed that was largely some bonus depreciation for businesses to encourage investment. It extended unemployment insurance by 13 extra weeks, and then also had some additional relief because remember, the tech bubble bursting overlapped with the 9/11 attacks. And so you had some industries that were impacted negatively by them, most notably airlines and other travel-related businesses. Right. And so you had that go through. You also then had an acceleration of the Bush tax cuts that was passed in 2003 as well. So I think if we look at this, the way that I try to think about it is, okay, if there is a recession today, what, like who or what ends up being hurt the most by it? I don't think we're in a situation where you're going to see anything done to try to federally support AI companies that can't support themselves. Is that fair?
God, I hope not. I mean, it's fair. God, I hope Congress doesn't go and backstop AI companies.
It's also tough for me to see just, hey, here's a bunch of stimulus checks going out again, because as much as individuals like to receive those stimulus checks, I don't think we liked the collective, hey, here's what happened when we just gave people a bunch of money. I'm not saying this is wrong or right. I'm just saying the last battle we fought with that ended up generating a bunch of inflation.
I tend to think you're right. I'm a lot less certain about that one. But I tend to think, a bunch of stimulus being pushed out is unlikely due to the inflation reaction in 2022. That's too fresh.
What I can see being done in order to kind of mesh a lot of priorities that are currently out there right now with where things are potentially impacted is, hey, let's pass, some bills for, additional funds for reshoring of American manufacturing through big investment on that side. Yeah. That to me is kind of where I feel it ends up probably landing, because it deals with construction workers that might be impacted by, slowing data center creation. It impacts, the production of goods in the U.S., which is an obvious priority at this point, and potentially gets people back to work in that fashion.
I would bet something specific on housing. Maybe that's the cusp that pushes the 50-year mortgage over the finish line, but other support for housing, because if there's another common theme right now, it's all about housing affordability.
So that's kind of where I think we may go if we get to that point. We're obviously nowhere near that right now. I think that, this is something that may or may not develop over the next 6 to 12 months, but it's stuff that I think about just to try to figure out, okay, like what are the possible responses and possible beneficiaries, because you want to be thinking about this stuff in advance. Yeah. Taking a look at markets as we head towards the bottom of the hour. The S&P is now back into the green, up 26 points, mostly in like the last 3 minutes while we've been discussing this. The NASDAQ also back in the green, up 10 points. And so, again, just a very choppy day with a lot of minute-to-minute volatility that ultimately hasn't really taken us too far at this point. Quick break. When we return, we get the trivia answer in Wall Street Watch.
Bringing the latest financial news straight to your radio every day. It's the Financial Exchange on the Financial Exchange Radio Network.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Your home is more than just a place to live. It's part of your story. In retirement, real estate can play a powerful role in how you manage your wealth and plan for the next generation. Passing property to family members isn't always easy. One child might want to keep the home while another prefers to sell it. Maintenance costs, taxes, and distance to healthcare services are all important factors that need to be considered, which is why having a clear plan can help prevent family stress while keeping your wishes front and center. Our new guide, Owning Real Estate in Retirement, is designed to help you fit your property into a long-term strategy that supports your life today and preserves what matters most for your future. Get your free copy right now by calling 800-393-4001. That's 800-393-4001, or request the guide at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
It happens all over Massachusetts.
Can you tie my shoes?
In every home and every community.
Be careful on your bike.
Learning can happen anytime, anywhere.
We'll see you at practice this weekend.
And no matter how learning takes place in your family's life, DESE is there as your partner. The Massachusetts Department of Elementary and Secondary Education. Never stop learning. Find out more at mass.gov/back-to-school.
Sponsored by the Massachusetts Department for Elementary and Secondary Education.
As a busy mom to 4 kids, my to-do list is full.
Trying to fit in exercise, eating right, and prioritizing self-care can feel next to impossible.
While we can't add more hours to the day, we do have a great resource to help.
Go Red for Women has easy tips, tools, and information to help you and your family live a healthier life.
So to all the moms, the aunts, the grandmothers, and amazing women out there doing it all,
visit goredforwomen.org/momlife today.
You take care of them, Go Red for Women will take care of you.
The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all 3. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com.
This is Tucker Silva of the Financial Exchange Show, and I'm joined today by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your financial exchange quick tip of the day. And today we're talking about joint revocable trusts. Todd, for couples who already have wills in place, why might it make sense to look at a joint revocable trust, and what can it do that a simple will can't?
Yeah, this is important because a lot of people believe that wills are an estate plan, when really a will is a won't. I've said it many times. It won't avoid probate. It won't reduce estate taxes. It won't protect assets from the nursing home. You're going to need some kind of trust to do that. So that's the most important reason why a will is not enough. Then you need to think about, well, what kind of trust are you doing? Well, in this case, we're talking about joint trusts. And boy, folks, these are so underutilized, but they are really powerful for moderate estates. And today, moderate estates are, below 15 million with the exemption as high as it is. So you can actually make it easier for folks. Put all the assets into this trust. You can jointly put your brokerage accounts and real estate in the trust. It's simple. You don't have to split assets between 2 trusts. Ease of operation, and it's going to reduce estate taxes, avoid probate, and provide a bloodline plan for your family, even to the extent where if you want to protect it from future creditors and divorces of the kids, you can do that in the trust as well. And the will won't do any of that.
Cushing & Dolan have been helping families like yours for more than 40 years now. Learn how you can avoid probate, eliminate estate taxes, protect your kids' inheritance, and keep your money in your family. Request this brand new guide from Cushing & Dolan called The Simplicity of Joint Revocable Trusts. Call 866-848-5699. That's 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
A lot can change in the span of an hour. Currently, the Dow Jones is up over 0.8%. The S&P 500 is up over 0.5%. And the NASDAQ has flipped back to positive, and now it's up over 0.3%. The inverse, the VIX, flipped negative, and it's down over 4%. Eli Lilly earlier this morning reached the $1 trillion market capitalization club. It's the first healthcare company in the world to join that exclusive club, usually dominated by tech firms. The company's stock has climbed more than 36% this year. The Indianapolis-based drug maker's stock has been riding the skyrocketing popularity of its weight loss injection Zepbound and diabetes treatment Mounjaro. Eli Lilly is up over 0.7%. Apparel retailer Gap is up over 8% after topping expectations for same-store sales with 5% growth in the latest quarter thanks to its viral Better in Denim campaign with Cat's Eye. Excluding the pandemic, same-store sales growth was the fastest since its fiscal 2017 holiday quarter. Cloud solutions provider Veeva Systems is off by over 12% after saying it expects fewer top biopharmaceutical companies to select its Vault CRM. Veeva posted third quarter earnings of $2.04 per share, excluding one-time items, on $811.2 million in revenue. Analysts predicted $1.95 per share on $792.8 million in revenue. Ross Stores reported better than expected revenue of $5.6 billion compared to analysts' estimate of $5.42 billion, pushing its shares up over 7%. Ross also raised its fourth quarter earnings guidance, saying, "We now expect tariff-related costs to be negligible." Finally, data analytics company Elastic is down over 14% after reporting fiscal second quarter results that saw a deceleration in cloud growth. However, Elastic's adjusted earnings and revenue topped Wall Street expectations. I am Ben Kitchen, and that was Wall Street Watch. Going back to a trivia question earlier, the question was, what day does Hanukkah begin this year? That would be December 14th. Maureen in Killingly, Connecticut is our winner. She's going to be taking home a Financial Exchange Show t-shirt. We play trivia every day here on the Financial Exchange. See the complete contest rules at financialexchangeshow.com.
Peace in Bloomberg, Mike. Bitcoin heading for worst month since crypto collapse of 2022. Was that the one they referred to as crypto winter?
I don't know, Chuck.
Apocalypse.
Frankly, so many. I've seen so much about crypto, especially before this most recent collapse, about, had you only invested $100 in Bitcoin, 15 years ago, look at how much you'd be worth. And it fails to mention that you would have had to ride out like several 90% collapses in the price of Bitcoin in order to get where you are.
Sure.
But this most recent one is significant. We're talking about a 30% sell-off in Bitcoin, as well as other cryptocurrencies. I guess where it crosses my mind, a client asked me about this just yesterday, in fact, is there any relation to the sell-off we're seeing in the NASDAQ and other equity markets and the more steep sell-off we're seeing in crypto? And I don't know which one might be leading the other, but it made me think of leverage, right? And it made me think of, okay, if an investor is levered in the crypto market, which we know there is plenty of leverage in the crypto market, and the underlying collateral for that loan starts behaving badly like Bitcoin has, you might need to cover your loan. And how might you go about doing that? Well, you might go sell your other holdings. And we don't have any data in terms of what the overlap is between crypto investors and AI high-flying trades like that. But I would imagine that there is some, and I'm just kind of openly wondering if that could be a contributing factor to some of the pressure we're seeing on the AI trade as well.
I think it's absolutely a contributing factor. I mean, we quite honestly, for the last week or so in particular, you've seen that as crypto, in particular Bitcoin, makes new legs down, it has tended to lead and coincide with what's going on in the broader market. And I think the problem here that the broader market has is that there's just, a much more direct conduit in there with all these Bitcoin ETFs out there that have billions of dollars now,
right,
where, look, you can be getting margin called on something like that, and it ends up liquidating something else that you then have, in a standard portfolio, and now it's cascading into other markets in ways that it didn't necessarily do so in the past. And so I think ultimately, I look at just what we've seen in the action on, some of these ETFs and stuff in the last week, and then what's been reflected in equity markets. And it's hard to look at it and say that they are not tied in any way, shape, or form now.
Yeah, I tend to see that link more and more clearly. And we've talked for years about the seeming relation between the NASDAQ especially and cryptocurrency moves. But it does... Look, I mean, the last 5 years in equity markets, as well as crypto markets, have been defined by the dip mentality. And we will just kind of have to see if that mentality returns to this moment in time or if we're in some different type of cycle. But I think where I drive this one home is a lot of investors have made a boatload of money over the course of the last 3 years, even well-diversified investors who are not trying to play crypto markets or just the NASDAQ. Investors across the board, if they've stayed invested, have made tremendous amounts of money over the last 3 years. And we are sitting here now with some renewed concerns about what has driven most of that leg upwards, which has been artificial intelligence. Equity markets at this stage, what do we say, Chuck? 5% off their all-time highs?
Yeah.
If you are finding yourself in a position where you're in that boat, you have made a tremendous amount of money over the last 3 years, and you're trying to figure out ways to diversify and protect that from a potential downturn. I'm not saying that that's where we are headed, but clearly that's the concern that is making its way through media outlets. It's the only thing that anybody is talking about right now in financial media is the possibility of this being a bubble. Have someone take a look, get a second opinion on what it is you're doing and how it might impact your future. Because I know that there are people that just get enjoyment from placing trades on stock trading platforms. But for most of us, the reason we do any of this is to fund our future and use those future investments to fund things like our retirement or our kids' college education. And if you're wondering how you are positioned for a potential shift in that narrative, give the Armstrong Advisory Group a call and let us give you an opinion. We work every day with our clients to formulate the portfolio that's right for their financial situation. We'd love to help you too. We offer free consultations to the public all across the New England area in person. We do these via Zoom, via phone, whatever works best for you. Offices, though, scattered from Portland, Maine down to Wallingford, Connecticut, and everywhere in between. And we'd love to meet you too. Number's 800-393-4001. If you're driving right now, can't call, go to armstrongadvisory.com. When you get where you're going, you can request a call back right on our website. But that number, once again, for the Armstrong Advisory Group and to book your free meeting is 800-393-4001.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Mike, do we want to cover another piece on the demise of the middle class? Do we want to talk about Black Friday being behind us despite the fact that it's next Friday? Or do we want to talk about people ditching booze for cannabis at Thanksgiving?
I'm confused by this idea of Black Friday being behind us because I just got like 4 emails from companies that I do business with telling me that they're going to be opening at midnight on Friday. So I don't know that the tradition is behind us at this point. Do you?
Well, I don't think it's behind us, but
if I go to an outlet mall on Friday after Thanksgiving, I bet they're going to be open and busy.
Yeah.
So,
I guess I'm just kind of wish casting.
Did that depress you?
I don't enjoy Black Friday. Look, I'm not a mall person. The idea of having to, in some cases, literally fight with other people to try to save $5 on a Christmas gift feels wrong to me.
What I'm particularly excited about, Chuck, on Black Friday, unfortunately, I can't attend because I won't be local for Black Friday, but the local store where I do most of my hockey shopping for myself and my kids, Play It Again Sports, they're having a Black Friday sale, and I mean, talk about a good place for a bunch of fist fights over discounts.
Yeah, I mean, you got gloves and helmets, like,
right?
Pop them on. Let's do it. You want it? All right, here we go. Get in the ring.
I'm going to get that stick for $45 come hell or high water.
Let's take a quick break here. When we return, we're going to be joined by LaMonica from Barron's. We're talking John Deere right after this.
Find daily interviews and full shows of the Financial Exchange on our YouTube page. Subscribe to our page and get caught up on anything and everything you might have missed. This is the Financial Exchange Radio Network. The U.S. Virgin Islands isn't just a postcard. It's alive with rhythm, culture, and celebration. This December through early January, St. Croix lights up with the Crucian Christmas Festival, a heritage carnival tradition dating back to the 1800s. There are incredible parades through Frederiksted as the festival village buzzes with live music, reggae, soca, and local island beats, as well as streets filled with the scent of authentic Caribbean flavors. Beyond the festival, there's St. Thomas, fresh with cruise hub energy, duty-free shopping, and panoramic views at Maggins Bay. St. John is quiet, wild, and pure, where every trail and beach is its own adventure. Explore one island or all 3. Each offers something unique, all with warm hospitality and that easy island vibe. Travel from New England could not be easier. There's no passport needed and no money to exchange. This holiday season, plan your escape and fall naturally in rhythm with the heartbeat of the islands. Visit usvi.com and book your trip today. That's visit usvi.com. Planning for the future is challenging. At Cushing & Dolan, we believe that sometimes the simplest step can make all the difference. A joint revocable trust allows married couples to stay in control of their assets while making sure those assets are distributed properly. Our new guide, The Simplicity of Joint Revocable Trusts, shows how couples can take advantage of both the $13.99 million federal exemption and the $2 million Massachusetts exemption without losing benefits when one spouse passes away. This trust may help you avoid probate, reduce estate taxes, and even provide a step up in basis that can save your family money when it's time to sell your home or investments. Learn how to make your estate plan work smarter, not harder. Call 866-848-5699 right now and ask for your free guide today. That's 866-848-5699. Or you can request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
Mark Vonner is the CEO of Veterans Development Corporation. His dedication to serving our veterans has made an incredible impact on his family and employees. And he is so proud to be the presenting sponsor of the DAV 5K Boston.
This is Brittany Vonner. I'm a registered nurse who is now working as an assistant project manager at Veterans Development Corporation. Working with my father, Mark, has been an incredibly rewarding experience. Our company is dedicated to serving VA hospitals and veteran communities. We don't just build facilities, we build environments that support healing, resilience, and family. We are so proud to see our work directly impact the lives of veterans and the professionals who care for them. This rich history is why we care so much about supporting great organizations such as the Disabled American Veterans Department of Massachusetts in the work they do to care for our veterans.
Join Veterans Development Corporation in thanking our great American heroes. Please visit dav5k.boston to show your support today.
Environmental nonprofit Ocean River Institute is working with communities to tackle climate change with nature-based solutions that feature slowing water down and building more soil with grasses and plants. Research indicates that people acting in their own neighborhoods can build an inch of soil in a year and slow sea level rise down by as much as 25%. Please visit oceanriver.org for more information on opportunities to make a difference and go the distance for savvy stewardship of a greener and bluer planet Earth.
Let's talk LDL. AKA bad cholesterol. The higher your LDL cholesterol, the higher your risk of a heart attack or stroke. Your health matters. Know your number. Talk to your doctor and get your cholesterol checked. And learn how to help lower your LDL bad cholesterol. Because your health is in your hands. Find out more at heart.org/LDL.
The Financial Exchange is live on SiriusXM's Business Radio Channel 132, weekdays from 11 to noon. Get the latest business and financial news from across the country and around the world, and keep up to date on how it might affect your wallet. That's the Financial Exchange, weekdays from 11 to noon on SiriusXM's Business Radio Channel 132. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. This year's race was a tremendous success, and if you act fast, you can sign up for next year's race during our early access registration period through November 30th. Discounts are available, but you have to register by November 30th. Visit dav5k.boston and secure your spot today. That's dav5k.boston.
As promised, we're now joined by Paul LaMonica from Barron here to talk a little bit about deer. Paul, how are you doing today?
I'm good, thanks. How you guys doing?
We're doing pretty well. So when we take a look at deer, overall, again, just kind of taking a look year to date since we're almost at the end of the year now.
Almost to the end, yeah.
Up about 13%, pretty much the same as what we've seen from the S&P, give or take, a couple percentage points on any day. But the path has been different, with deer struggling a little bit since the end of Q2. What's going on here?
Yeah, I think there are, some concerns about the broader economy that might be weighing on Deere's stock. But when you look at this company and the potential for earnings to really begin rebounding over the next couple of years, there are a couple of factors at play that could really help. I know it's going to sound a little bit of strange, because when you think of Deere, you think of big tractors, but there is a bit of an AI element, smart technology, in some of their agricultural equipment that could help farmers wind up knowing where exactly in a more precise way to be, spraying fertilizer, for example. That's potentially a boost for Deere. And, I think there's the hope that, China-U.S. trade relations will stabilize after some of the tough talk between Trump and Xi, and that, China obviously could be a very big purchaser of Deere equipment, given, soybeans.
When we look at Deere and the construction side of things, what exactly does that side of their business look like, and can it offset some of the farming side?
Yeah, I mean, Caterpillar has obviously been a phenomenal stock. So Deere does compete to some extent, not as much, but there is the construction element as well that can help offset some potential weakness in agriculture. So I think that is, you're right, a potential bull case for Deere stock as well, even if the agricultural market doesn't rebound as quickly as some analysts would hope.
And in terms of Deere and, kind of looking at where they may expand into, obviously, look, this is a company that is, a mainstay in, any you go through, any kind of community. You've got Deere tractors, out there. They're, big, obviously, in construction. But is there anything that they're trying to do that's new as far as new business lines they may be trying to break into?
Yeah, I don't know if necessarily Deere is the type of company that you're going to say would really benefit from new business lines per se. I think it's really more about modernization of the equipment. They are going to be spending a lot to upgrade manufacturing and assembly lines so that the equipment is better. And I think that's really the case with a company, an industrial company like Deere, that you're hoping that through technology they are able to more efficiently produce the equipment, as opposed to, say, Deere looking to enter a brand new market segment.
Very good. Paul, appreciate you joining us today. Thank you so much for the time, and we will catch up with you soon.
Yeah, definitely. Have a good Thanksgiving, everyone. And yeah, I guess we'll talk in December.
Absolutely. You too, Paul. And we will definitely catch up in December. That is Paul LaMonica from Barron's talking about Deere. Mike, what else do we have that we haven't gotten through today?
This is a few weeks old now, but the alligator rescued from the Charles River in Boston has made national news because, thank God, alligators don't belong in the city of Boston. Two things that I will just say about this. One, if our environment is changing enough for alligators to survive in Boston, then I'm moving to either Alaska or Canada. Two, an alligator was discovered in Chicago back in 2019, and they gave it the excellent name Chance the Snapper.
Ooh, that is good. That is good.
And I'm just really disappointed that we haven't come up with a good nickname for this gator that we discovered in Boston. There's got to be some good Dropkick Murphys, Aerosmith, Cars nickname that we can come up with here, because thus far I've come up with nothing and nobody else has either. And I find that genuinely disappointing. But I live very close to the Charles River, and when I initially read this story, not knowing that, some doofus probably let a pet out, I had some moments of fear. Then I saw it, and it's tiny. It's like the size of a water bottle, and it's really cute. So I wasn't. I'm trying
to think like what you would.
I was tossing into AI, and I'll tell you, Gemini came up with nothing good for me.
What can you give me some of the bad examples?
We had Arrow Snapper as a play on Aerosmith. Charles Kroc. There was one, just really nothing all that solid.
Yeah, I'm trying to think if there's anything that you could do there, but I'm kind of drawing a blank.
Yeah.
Is there anything really, like, for some reason, I don't know, like Matt Damon kind of gives me alligator vibes. Like, is there anything that you can do there?
Hold on, no, we have to explore that. Why? Why does Matt Damon give you alligator vibes?
I don't know, like, I just feel like doesn't his face kind of look alligatory sometimes?
No.
No?
Yeah, I mean, Marky Mark, Ben Affleck, if anybody has any good Gator nicknames based on famous Bostonians, we would really appreciate
there's
it,
no
'cause we're
good
all coming
names
up
that like
blank.
rhyme with. There's nothing good that rhymes with Gator. Like I'm going through, like Damon, Affleck, Bill Burr,
Well, but
Wahlberg.
it could be based on its sharp teeth or the fact that they bite. You know, there's other things about gators that we can feature here. But Chance the Snapper is definitely coming up with the win. So good job, Chicago. You have us beat.
Markets have taken a meaningful turn positive. The Dow is now up more than 500 points. S&P's up more than 1%. NASDAQ up about 170. Hope you all have a great weekend. We'll see you back here on Monday.